everyone, and welcome to the Greater Central Florida Multifamily Investors Group, where we focus on investing where it makes sense. I'm your host, Ismael Reyes. This meetup is for anyone who wants to grow their wealth through multifamily real estate investing. Whether you're a beginner or an experienced investor, you will learn valuable information that you can use to start or grow your real estate portfolio to create generational wealth. On to today's topic. Are you struggling to break free financially? Feeling stuck? This webinar will crack the code for you. Learn how to shift from scarcity to abundance in real estate investing with me, Ismael Reyes, and Hutch the Marine Investor, Master Gunnery Sergeant Shalon Hutchinson. Unleash your true wealth building potential, and here we go. Hutch, the Marine Investor, and I will explore the power of the abundance mentality in multifamily real estate investing. We'll uncover the secrets to adopting this mindset, understanding its impact on your investment decisions, and unlocking a wealth of opportunities. Whether you're a seasoned investor or just starting out, this is designed to provide you with the knowledge and insights you need to thrive in the industry. Exploring the abundance mentality. We'll delve into the concept of abundance and how it differs from a scarcity mindset. Discovering how shifting your perspective can open doors to unlimited potential. The psychology of successful investors. Understand the mindsets and the habits of successful multifamily and real estate investors. Learn how they think, what drives their investment decisions, and how you can emulate their success. Overcoming limiting beliefs. Identify and conquer the limiting beliefs that may be holding you back from achieving greatness in the multifamily real estate market. So here's the bottom line up front. Understanding and adopting an abundance mentality can improve your investing success by enabling access to a wealth of opportunities that can lead to your achieving higher returns. But what is an abundance mentality? An abundance mentality can be defined as a mindset where individuals believe that opportunities are abundant and that there is enough for everyone to succeed. It involves having a positive perspective and believing that there are always ample investment opportunities available, fostering a collaborative environment. So that's a definition, but let's talk about how it looks like when you compare it to its opposite. Scarcity mentality, which unfortunately a lot of people still have in this business and in life. If you have an abundance mentality, you have confidence, you know that you have resources available to you, and you just have to find them or put them to work. But when you have a mentality of fear, you think about hoarding things. You're thinking about how you can keep what you have, what quote unquote little you have, or maybe it's a lot in your mind, but for whatever the reason, you're not willing to share that. But you think there's not going to be anything else. And it's unfortunate. The truth is, the more you give, the more you get. That's reality, especially in this business. And let's talk about collaboration. Honestly, when you're coming from an abundant mindset, you easily collaborate. You cooperate. That's how you get ahead. Again, you're not worried about what other people have, or what you may be giving to others, because you're going to get back more in return. Whereas if you have a scarcity mindset, it's all about competition. If somebody's doing well, you just want to put that person down because clearly they're affecting your ability to be outstanding in your mind. So it's just a bad mentality. A scarcity mentality also includes being secretive with how you do things. If you've got a deal, you're not going to share this deal with anybody, at least up front, because you find it and you want to carve out as much as you can for yourself before you share it. And then even when you do share it, it's probably late and you're running around trying to find last minute capital. And by then you've lost a little bit of the deal, or maybe you have to give additional money because you got to extend that contract. Instead of bringing in people early and sharing what you have, you want to do as much as you can by yourself. That's a scarcity mentality in this business.
Yeah.
Or if you share, even when you share, then as you get into these deals, if you have a scarcity mentality, you're not willing to share bad news with your partners. If something happened in the property, Or with investors, you want to hoard that. You feel like if you give information about how the property is doing and there's something happened there, that it's somehow going to be reflective on you. But the reality is, how do you stop an underground pipe from bursting? You can't. What you can do is withhold that information, and then later on it becomes relevant because now you can't send out a distribution to investors and they're wondering why. You took too long to provide the information on that pipe, and now you're working from behind trying to cover tracks.
Yeah, I can always add, man, this abundance mentality versus a scarcity mindset is something that I think every single human being struggle with. And a lot of times a part of our upbringing. I remember growing up in Jamaica, a quote that I often hear is that money doesn't grow on trees. And that in itself is creating a scarcity mindset. And I think as we venture into adulthood, I think you alluded to this as well, is that we go into protection mode where we save $10,000, we save $100,000. We want to keep it in the savings account, not knowing that in a bank, your $100,000 it is off depreciating value, right? So cash in the bank is good, but just know that while it's sitting there, it's depreciating. So, but I want to go into a quote or to one of my mentor or indirect mentor is a man that teaching goes deep, and it's going to be challenging to find a successful person that have not followed this gentleman teaching. And talk about Napoleon Hill started off his book by saying, whatever the mind can conceive and believe, it can achieve. So it goes to show that whenever you take control of your mind and understand and create or get a better understanding of your responsibility to create the future that you yourself deserve, that's where you start to develop the abundance mindset. That's where you want to get into bigger room with people that are smarter than you are to ensure that you continuously stretch yourself. See, Napoleon Hill talk about the importance of understanding where you are in your journey. And he takes us back to childhood. And one of the things he talk about is that every single one of us, when we were born, we came with two envelopes. And at some point in life, we get to choose which one of those envelopes that we open. See, on the abundance side, we have an envelope that is filled with sound health. We have that envelope, the same envelope is filled with peace of mind. It also filled with a labor of love and the freedom from everyday fear and worry. The same good envelope is filled with positive mental attitude and also an environment or a mindset where we can create any level of riches that we want. And that's the abundance mindset. But some point in life, we get skewed and we start believe in a certain way, or we adapt to a paradigm that was taught to us by folks who are, oh, I don't want to discredit any of our small community, but folks who are doing the best that they can with the information that they had at the time. So think about it. If you are adults right now in your 40s, you have grown through the 80s. You have grown through the 80s and 90s where there have been significant amount of transformation, especially in the informational age. So there's a good chance that your level of intellect far surpasses the level of intellect of the people who actually raised you. So it's really important for you to understand when you need to have that shift in paradigm to learn something or to embrace a concept that is going to put you in a better position, right? Because you now have better information or now have access to more information. But some people, they want to stay true to the paradigm that was created for them. And what happened is that they open up the second envelope that's filled with ill health, fear and worry, indecision and doubt, frustration and discouragement through life, poverty and want, and a whole flock of other things that doesn't serve your future self. And those people tend to develop what we know as a scarcity mindset that rob them of the confidence and the belief that there's ample resources. See, there's this word that I learned recently. We learned about the word paranoia. So paranoia is just a fear of the bad things is going to happen to you. Pronoia is just knowing that the world will conspire once you believe. My business partner, Dr. Jones, he said, don't be surprised once you make a decision how the world around you conspire to make things happen on your behalf. This is where things start happening for you because you now change your mindset that, look, the world is conspiring or the world is conforming to ensure that the things that I want in life come to fruition. So once you start doing that, then you start developing a lot more confidence. And look, it's important that we disprove our fear by our worth. And the only way you can prove your worth is by taking that action. Get out of that scarcity mindset, get in the abundance mindset, learn more, develop more confidence by the belief that there's more resources, and get out of that environment where you're driven by fear and the belief that you have limited resources.
Fantastic. That's exactly what we wanted, Hutch. This is exactly what I think people need to hear and understand. And I like the way you break it down and make it personal for people, for yourself. So that's beautiful. So now that we know what an abundance mindset is, let's take a closer look at the 3 ways that we can apply it to increase your net worth. The first is through the expansion of your investment horizons. With an abundance mentality, you approach real estate with an open mind, a willingness to explore various investment opportunities rather than limiting yourself to whether it's single family or whatever it is you're used to, or a particular location. So you broaden your horizons and you explore different property types, investment strategies, and markets. And this expanded scope allows you to tap into a wider range of potential investments, potentially uncovering hidden gems that can significantly boost your net worth. Your mindset isn't like this. You don't want to have blinders on. You want to open that up, open those horizons up, and take a look peripherally around and see what else you can potentially involve yourself in that may be better than if you were just looking straight ahead. So when you embrace an abundance mentality, you become comfortable stepping outside of your comfort zone and embracing new challenges. This mindset encourages you to take calculated risks and seize opportunities that others are going to overlook. By diversifying your real estate portfolio and exploring these alternative investment avenues, you increase your chances of finding the next big deal that could have a substantial impact on your net worth. Hutch, you want to add anything on this slide? I know the next couple of slides are yours, so feel free if you feel you want to jump in on this one and then keep rolling to the next one.
Yeah, for sure. So we're talking about embracing the abundance mindset or the abundance mentality and how it can impact your network. Look, when I decided to make real estate a business in 2018, it didn't come by an accident. My dad has been investing for a very long time. My dad told me that, look, Shalon, they call me Shalon. My family call me Shalon. Friends call me Hutch. He said, look, Shalon, you can actually flip properties utilizing other people's money. And that was another paradigm shift for me. Because if you know my story, my dad had been giving me little nuggets over the years that teaches me how to own some of America. So when I decided to make real estate a business in 2018, right, I realized that single family is achievable. But the goal was to get to multifamily. Now, when I made the decision in 2019 to transition from single family to multifamily, one of the things that I realized is that I was on an island. It was me and my wife, and we were on an island. We didn't know what we did not know. So one of the things we realized that this abundance mindset is, to the previous slide, is we have to embrace our collaboration. And that got me to going to a real estate conference out in Dallas, Fort Worth, Texas, with some amazing minds at that conference. And that's where I met my partner, Dr. Heath Jones. So myself in the military, in the Marine Corps, understanding that the importance of team, Athene and I understand that we need to get off the island and build some more collaboration to be able to do exactly what we want to do. So I met Heath there and we started collaborating. Now, we didn't jump right into partnership. What we did, we started off becoming accountability partners. And what this does, this gives us an opportunity to learn each other's. The same is true if you're a passive investor looking for an active operator to invest with, or a syndicator to allocate your capital. The same is true. You're going to spend a good 4, 5, 6, maybe 2 years, 6 months, or maybe 2 years to actually follow these individuals' track record, see them manage a deal, having some conversation, attend their meetup, listen to their podcast, and different ways of learning these guys before you actually get into a deal with them. The same is true whenever you make a business partner. And Dr. Jones and I, we did just that, with the understanding that collaboration is important to be able to realize the dreams that we want to realize. Diversification, to your point, for a higher return. Ray, I was in New York last October, and I had the opportunity to did some recording in front of the New York Stock Exchange. And we often hear the thing in real estate where, a lot of people want to embrace the concept of financial independence, retiring early. And to each their own, it is really nothing wrong with that. But in most cases, people are looking for different ways to diversify. The most sophisticated investors looking for ways to create more diversification in their investment portfolio. So Wall Street and Main Street is definitely two of the ways to do that, where you have some money in the IRA, and that is your later money. You can invest some money into real estate where you're going to get that cash flow, and that could be your today money where you use to supplement your lifestyle, right? Example, if you are a veteran, Ray, or an active duty service member getting ready to transition to the civilian sector, one of your concern is going to be, how do you bridge the gap between your active duty pay and your retirement pay? You're looking at a good 50% pay cut, sometime more, depends on where you choose to live. You want to ensure that you have a diversified portfolio to where you can have a nest egg for later, but also cash flow for today. And investing in real estate gives you just that. So that is going to come with some challenges, man, because when you are, especially if you are the primary breadwinner or you make the most money in your family, you carry the weight of ensuring that you can provide a good quality of life for your family. So you have to embrace the risk, or embrace the challenges, and also take a calculated risk towards the type of investment that you choose to make. And of course, this will help you to provide a good lifestyle for your family in the future, especially after retirement. Now, look, in real estate investment, what we do, there's several different ways you can invest in real estate. And whether you choose to invest in a REIT, REIT, real estate investment trust, where this is on Wall Street, which is where you give an investment company your money and they grow it for you. It's a very passive way of growing your wealth. In fact, one of the richest men that we know invests into REIT, Warren Buffett. That's how he invests in real estate, he invests in REITs. But for the more everyday people like you and I, especially your retired veterans, you want to be able to develop the relationships with the operators or the capital allocators to where you can pick up the phone and call these men and women and say, I see that there's a declining occupancy in this property. Do you mind explaining what's going on? And they can tell you, we are renovating several units and we are trying to ensure that we can catch the rust in the spring to ensure that come summer, the property is of a higher occupancy. So the good thing about investing with people like Ray and I is that you get to call us on the phone on a monthly basis when you have any kind of concern. But before you start placing your capital, it's important for you to understand a couple of different things, especially about the asset class. What we invest in are commercial properties, and the commercial properties, they can be a retail shopping mall. You can invest in a mobile facility, not mobile facility. That's a military term, right? You can invest in mobile home park or multifamily properties. You can also invest in industrial, but what we tend to focus on more is the class A, B, and C properties. D class of property, I won't cover that because it's not something we're investing. That's where shots are fired. That's where people are getting shot up with drugs and so forth. It's the lowest class of property. So what we focus on more is class A, B, and C. Class A property is going to be the shiny object on the hill, right? This is going to be the vintage less than 10 years. Less than 10 years old. They have the nice swimming pool. They have the nice clubhouse. For the investors who are investing in those properties, they're looking for a more stable form of investment where it's not going to generate, in some cases, these investors are not looking for a doubles. They're looking for singles as far as their return goes. But depends on the operators. These properties can perform significantly because of the lower risk that you're taking on whenever you invest in Class A properties. Now, Class C properties, this is the military term, but if you are investing in Class C property, you'll understand that this is turned around an aircraft carrier. It's going to be slow. It's going to be a lot of moving parts, and there's a greater risk for those assets. And those properties are usually older, usually about 30 years and older vintage. Now, the sweet spot between A and B, we're looking at now between 11 and 25 years old. Now, keep in mind that the quality of structure or the quality of the features that were accepted 20 years ago, 15 years ago, has changed significantly over the years. So when we are buying these property, we are looking at what is trending and can we take a B class property and make it a B plus property comparable to A-class property, but not exactly at those price points. So we can go in, we can do some force appreciation, and we can get our investors some good returns without taking a great risk. So it's important to understand the quality of asset that you're investing with and also the operator. And this would help you to pretty much look over the horizon of how the property can perform because of your understanding of the property. Partner, get some collaboration, take time to know those operators, and you can expand your net worth through those strategies. All right, so after you see over the horizon, now we got to get into, we talking about this abundance mentality. Now, how do you cultivate a growth mindset? See, in most culture, they said that give me a child from birth to age 7, and I will show you the adult. And the reason for that is that there's a plethora of studies that I've done over the years and in recent years that prove these small community thought process and the tribal knowledge to be true. And they say, give me a child from birth to age 7, and I show you the adult. And one of the things that they're talking about is when a paradigm is written as a young child, it's going to be challenging to really change that. And here's why that is challenging. We love our mom and dad. We love our aunties, our guardians in our small community. We love our church. We love our school. There are some teachers that get some respect that will never be lost throughout our lifetime. So we have a deep appreciation for those folks. But that comes some point where we need to elevate yourself beyond what we were taught in our small communities, schools, and churches, right? We need to grow a little bit more. And life give us more experience, life give us more challenging to find usefulness in the things that we have taught. But don't get me wrong, there are principles. There are principles that are taught in our small community that should never be deviated from. Principles never change throughout your life, but there's some societal norms and some cultural norms that adjust over time, and it's really important for us to understand when to make those necessary adjustments. Now, how do you cultivate a growth mindset? So it's important that we believe in continuous improvement and development. And I talk to so many people, Ray, that are very reluctant to pick up a book after they graduate from high school. And it's such a shame because I often ask these folks, like, what do you think is worse? Not knowing how to read or having the capability of reading and choosing not to? Because there's so much information out there. Because look, we do not have enough time in our single lifetime to acquire the level of knowledge and experience that we can achieve. So some dude or gal have taken 20 years, in the case of Napoleon Hill, taken 20 years to interview some of the greatest minds that ever existed, especially in America, interview them and put that into a book that we can absorb in 3 to 4 hours. Not only absorb, we can use that as a blueprint to create a better trajectory or a better quality of life for ourselves and the one that we care the most about. So it's important to read, make goals, and choose the literature that is aligned with those goals that you have established. So actively pursue personal development and opportunity. So our good friend, John Maxwell. John Maxwell he was a preacher. He's now a leadership mentor, a leadership coach. And one of the things that he talk about, and they speak directly to the point about actively pursuing personal development and opportunities. He said that people change when staying the same becomes too painful. So now that you listen to this and you are now aware that you are going to wait until your life is painful enough to make a change. It's important that you take these tidbits of knowledge and you don't wait until you're going through some really rough times to actually choose to change. You don't have to wait that long. Choose to change Choose to change whenever your life is not that painful. All right. So capitalize on emerging trends and opportunity. Information is always changing. AI is a big one that we're using nowadays. And it's important that you capitalize on that. Now, look, you don't have to be using AI to publish information to people. But what you can do, you can ask artificial intelligence a specific question about something that you want to learn, and it will give you the information that you need. And it's important that you are at a certain level in your growth that you are able to discern from what is facts and what is not factual. And also bounce that off a friend or mentor. So there's always things changing. So bounce that information that you're learning off a trusted friend or a trusted mentor. Now, you're listening to this, you listen to this webinar. You could be listening to it via podcast, or you're watching it on YouTube. It's important that you go beyond this. You go beyond your car, I call it automobile university, right? The AMU or automobile university. You go beyond that. Spend some money and go to an environment where there are some people who are doing some amazing things, the things that you are aspiring to learn. For example, if you want to learn real estate, or if you want to learn how to create a real estate fund, there are specific events that are tailored around those events. If you want to learn how to be a better passive investor, right, then you want to go to events that passive investors are gathering and learn about how some of the best minds in the business are leveraging their capital to double up and create a better financial journey for themselves, right? By learning new strategy and also know the ins and outs of actually vetting deals and vetting operators. You know, what you need to focus on is not so much how it's going to cost, how much it will cost to go to this event. What you need to focus on is the value that you will get from attending these events. What do you think about that, Ray?
Absolutely. It's hard to keep it, it's hard to understand without the experience how much you can gain from these events and the people that you meet. They obviously, everybody, you hear this a lot, but think about the fact that your net worth is the same or more of your net work. So that's the value. If you put yourself, to your point earlier, if you put yourself in those kind of rooms with those kind of minds, there's no telling how far you can go. And that you just, the value of that is much more than what you would pay to go to a conference, for sure.
Facts. The next topic I'm going to talk about is risky business, right? It's risky business. Can we talk about expanding your investment horizon? And then we talk about cultivating a growth mindset. Now, look, in my 25 plus years of Marine Corps, I've been in the Marine Corps. A lot of folks don't really unless you've served on a leadership role in the military, you don't quite grasp the magnitude of our responsibility to the troops that we lead. See, there's so many different roles that we have to play in ensuring that we can embrace the concept of mission first, but Marines always. We're in the people business. Now, when you are growing at a rapid rate because you have established a lot of goals for yourself, people around you could potentially become unfamiliar. And I say that to say this because when you start the slide, leveraging synergistic partnership, when you start growing, it's important to pay attention to your surrounding. The reason why I say that, because it's important that you are not the smartest person in the room. That has its value in some cases, but when you're looking to grow, you want to surround yourself with people that are a little bit smarter than you, who's going to teach you a few things and is going to stretch you. So the abundance mindset foster collaboration. Now, what does the collaboration look like? See, most people, they want to look at the Grant Cardone and the Donald Trumps, and those people are performing at a significantly higher level than we are. And that can be overwhelming to incorporate or to implement their 30, 40 years of experience. So what I would advise you to do is to collaborate with people who are maybe 2 or 3, or maybe 3 to 5 steps ahead of you. Meaning, if you're a passive investor getting ready to retire from the military, find a person who is maybe of equal or greater rank that have transitioned from the military. Talk to them and see exactly some of the tools that they implemented to ensure that they can continue to provide for their family post-retirement. If you're a passive investor looking to grow your nest egg for several years to come, ensuring that you're talking to people who is a little bit ahead of you. Trying to copy exactly what Warren Buffett is doing right now might be a little far stretch for an investor who need to grow to 15, 20, 30K per month in passive investment. So find somebody who is a little bit ahead of you and collaborate with them. The same is true if you're an active investor as well. So continue to value working with others for mutual benefit. See, there's a famous quote that says, if you want to be successful, help people to do what they wanted to do anyway. And that's creating that synergy. And that's what Heath and I, we tend to call win situation. Whether we're acquiring a property or we're creating a relationship with investors. We're acquiring a property, win for the seller, win for the broker, and of course, win for the team, which is the sponsors and investors. So creating win-win situation. Now, as a active duty Marine, and transition into the civilian sector in about 24 months. Embracing the team concept, it's something that I hold near and dear, right? Because look, we definitely go farther together. And when we're able to leverage resources, for example, one of the reasons why Dr. Jones and I work, because look, he will tell you that, my kids will tell you that I never meet a stranger. And Dr. Jones will tell you that he never meet a stranger that did not speak to him first. So needless to say, whenever I go to a conference, whenever we go to a conference, I'm the one social butterfly. I start a conversation, bring my business partner in, and then we continue the conversation. But when you start talking about putting information and ideas into a spreadsheet to where it makes sense for identifying the highest and best use for a property, Heath does that almost seamlessly, right? He's a data analyst. He's a data analyst. He's a research scientist for the Army. So he's parsing our data on a daily basis. So that is a strong point. So us collaborating together, where I focus on building a relationship and he focused more on the back end, we get us working together. But remember, in the beginning, I talk about we didn't just jump into partnership. We took some time to learn each other, understand what make each other tick, and also understand some of our strength and some of our weaknesses, and ensure that we can create that synergy in our partnership. And from the partnership, we transitioned into larger project. I was going from single family properties, and he had about 20 units at a time, and we were looking to scale. And with the partnership and the synergy that we created by learning each other and learning our strong points and learn the value that we bring to the team, we were able to take on larger projects and create better relationship as we expand H Squared Capital. Don't be afraid to seek mentorship of like-minded individual. Now, look, I really want to dive a little bit deeper into the like-minded individual, because people bring their problems to two different people who they know is going to identify and agree with them, or people that they know can solve those problems. Now, the thing is, most people bring their problem to people who's going to identify them and keep them in their comfort zone so they can feel good about themselves. Or they bring it to people who doesn't really quite understand what they're going through or growing through. But if you really want to get on your journey and take massive action, it's important that you identify people that is going to stretch you. And those are the like-minded individual. Your like-minded individual should be elevating. I had a good Sergeant Major Garcia. He's no longer in my command. Actually, we both left the command, and we was getting ready to go down to the Philippines. And he talked about we was going on a international training evolution in the Philippines, and he brought all the Marines together, all the enlisted Marines together, and he said, "Look, team, we're about to go forward. We're about to go forward and do some good things, and our responsibility while we're in that operation environment is to build partnership, friendship." Relationship, and friendship. And those are the ships that are important to us. If you listen, man, the ship is supposed to take us places. And kudos to our Navy counterparts for taking across the world so we can go do God's work. But it's important for you to understand when a relationship have stagnated, and when it's time for you to leveling up to like-minded individual who's always learning and who's always willing to teach you things, and you are also willing to be stretched to become better, right? And that's what I mean by like-minded individual, because people always want to stay in their comfort zone. So ensure that your relationships are actually taking you to a better version of yourself. What do you think about that, Ray?
And that's deep. That's deep. The reality is, in this business, you just can't do it alone. You can buy a house by yourself. You have to have money, maybe save a little money, but this requires a team. And you said it yourself, um, if you're good at something, focus on that, get better on that, and let your partners or partner focus on the things that they're good at. Because I guarantee you, the things that you're good at are the things you're going to continue to improve because you by repetition and the attention that you're paying to those things. So that's really the best way. And let's just talk about money, right? Because obviously, what we want, obviously, when we get into these deals, is we're partnering with passive investors. But let's face it, no matter how much money you and I have, Hutch, at some point, we're going to run out of money. We're going to buy that nice B-class property and we're going to start operating that property. And there's going to usually happen is when you have one, all of a sudden there's other people out there looking at you and they're going, hey, I may have a deal for you as well. But guess what? Now we need to bring in additional partners because our money is tied up in this property, or at least a good chunk of it. So you just always have ways to grow. The pie gets bigger. Your slice may get a little bit smaller, but the pie is getting so much bigger. And that's the way you got to think about it. And I guess in a nutshell, I couldn't have said anything more about what you said. I like the ship analogy. Maybe people are going to listen to this one, right? I got folks there, but yeah, thanks for taking our Marine brothers around where they need to do their thing. And they're probably going to love you for that one. But let's go on to the next one here. It's really talking about, now that you have an idea of what it is, the abundance mentality versus scarcity mentality, and we've talked about all these pieces about how you can grow your net worth. Let's talk about what you can do to make sure you have the right mentality, because there's a lot of gray here. It's not you're either abundant or scarce in the way you think. It's an area, it's a gray area. And there's always room for growth, just like there's ways to learn. There's also ways to assess your previous behavior and improve it to get further along the path to abundancy. And so let's get to that next slide, Hutch.
Yes, sir. So this next slide, we'll talk about how we can shift to an abundance mindset in our real estate investment. Look, in short, the scarcity mindset said, I am who I am, and I'm not going to change, right? Abundance and a growth mindset saying, come to the conclusion, right, that I am this way because of the decisions that I've made up to this point. So now I believe that I can grow. I believe in growth. And where I go from here on will be directly proportional to who I choose to become, consistent with the decisions that I make. And also the BS that I have about my situation. And BS, I don't mean in the bad words. It's also bad words, but it's our belief system. See, Coach Trevor talk about our state, our story, and our strategy. And it's really important to understand how your thinking is affecting your growth. See, your state is plain and simple, is your state of mind, right? Where are you? Where do you exist? What is the dominating thoughts that occupy your mind? See, your mind is probably maybe the only organ in the body that can be passive, but also purposeful, right? And the thinking part of that is where you find purpose. So it's really important for you to think about your thoughts, right? And really narrow them, because there's a famous study that shows that 85% of our thoughts are negative. Additionally, a large amount of those thoughts are also repetitive from the day before and probably the week before. And those are the dominating thoughts that occupies your mind. So that becomes your state. Now, the story is the things that you repeatedly tell yourself. See, there's one point in my life where my dad and I didn't really have a great relationship. I thought about how my life could have been different. And it took a first sergeant down in Pensacola, Florida, that tell me, look, you are who you are because of the decision that you make, not your father. Nobody is to be blamed or accredited for the decision you make. So people can be around you to support you, mold you, mentor you, but the actions that every single one of us need to take to become better is going to be relate to the story that you tell yourself. And you can tell yourself that I am this way because, or you can tell yourself that I can be better. And now, once you change your story from a scarcity mindset to a growth mindset, now you get to create a strategy. And that strategy Now you started looking for things. Remember, I told you that whenever we decided to go from a single family properties to multi-family properties, Athena and I, doing an after action report, we realized that we were on an island. And our strategy was to get amongst people who are doing what we want to do so we can become better. So we embrace the growth mindset. We embrace the collaboration. We understand that friendship and partnership, they understand that partnership and friendship can actually get us on our journey to become better. So collaboration got us through challenging times. So we educate yourself consistently to actually get better, to embrace the abundance mindset. Educate yourself on the benefits of abundance mindset and actively working to incorporate this into our investment strategy. See, I often use the term gray. All right. So Ray, you're going to get a kick out of this one. So there's a famous quote. I don't think I coined this saying, but Heath and I, if you listen to the Multifamily Real Estate Experiment podcast, which my business partner and I, we co-host, if you listen to that, you often hear us talk about owning a grape versus owning slices of watermelon. See, it takes the abundance mindset to not want it to own everything. Ownership is good, but if you're owning slices of watermelon and you stay with the course and you have this long-term horizon for your investment strategy, then before you know it, you start owning slices of watermelon. And before you know it, you own one really big watermelon, right? And you get to level up. We call it the economy of scale, right? So I can continuously own single family properties for the next 10 years or 10 loans, which maximize the amount of loans we can take out until we figure out how to get like a blanket loan or invest portfolio loan. But in a lot of cases, people are trying to buy one single family home per year for the next 10 years and then pay them off at 20 years or 30 years to be able to secure their retirement. But it's another way you can do that. You can do that by leveraging more freedom for yourself. See, most of us were looking for time freedom, financial freedom, and freedom of purpose. Also location freedom and passive investment through real estate get that for you. And you really got to embrace the abundance mindset to actually become a passive investor in real estate. All right. So we talk about surround yourself with like-minded individual and seeking out mentorship. Now, there was a point where Dr. Jones and I, we were reluctant to get mentorship. And the reason why we were, because there was so much information that were available that we can actually learn, free information. And then we get to a point where we feel as if we plateaued, and then we start paying for mentorship. And in 2021, we got to that place, and that's when we joined the Reyes Masters with Hunter Thompson and his team. And we have had seen a great economy of scale in our portfolio since then. So surround yourself with like-minded individuals. And of course, practice gratitude and focus on a positive aspect of your investment. And to be able to really find a lot of positive in your investment, in the performance of your investment, it starts with choosing the right person to invest with. Take some time to learn these people, get on a phone call with them, talk about the projects that they currently manage, talk about the good, the bad, and the ugly. And if they're reluctant to tell you about the ugly, chances are whenever it comes time for them to tell you about the not so good news about the performance of your asset, they're gonna hold on to this information before the asset is performing significantly worse than you expected. And no news is usually not good news, right? So you want to be able to have those frequent follow-up and build those relationships and be able to have those conversation with the investor that you choose to put your capital with. Now, Reyes, what do you think about that, man? Right.
Spot on. Everything you're saying is spot on. I think one of the things on this slide that I think I always pay attention to, because I think it from a military background that you have and I have, and one of the first things that we're taught at the very elementary levels is how to deal with obstacles. And that's essential, that you take a look at the obstacles and you don't think of them as things that are gonna stop you. An obstacle can only stop you if you choose to let it. A lot of times you can work around an obstacle. You can figure out how to get around the problem. It doesn't mean you go straight through the obstacle. Sometimes you go around the obstacle. But right. the point is that you're not going to get very far if every obstacle you run into is basically stopping you. You you're just standing in place. You're not going to make any progress. So take a look at these obstacles, just a military person would, and think about how to get to where you're trying to get to by either going around it, going through it, whatever has to be done. And so let me give you an example of that. A lot of times as a passive investor, you've got money sitting in an account. One of the things that I like when I talk to military folks is they have a thrift savings plan. And a thrift savings plan is great when you're in a service and you're putting money in. But when you finally get out of the service and you're transitioning, you no longer have the same type of access to it. You can't continue to put money in it. So it sits there and it can accumulate, but probably not very fast in a lot of cases. That's a problem. That's an obstacle for growth. However, there is a way to get around that. We can put that money into a solo 401k. We can put that money into a self-directed IRA. And then now you have access to your money again, and you're able to put it to work for you in better ways, in more productive ways, real estate being one of them. That's how you go through an obstacle, right? You just got to find those things. Sometimes you can figure that out on your own, but a lot of time you exercise some of the things that we talked about to get around this. Sometimes you just need someone else that's just thinking, that's already done it or has some additional knowledge that can get you through that obstacle. It doesn't mean that you have to do it by yourself.
Yeah, I like the points that you make, man. You can take some, you can pivot, right? So example, just picture this. 4 to 5 guys waking up early in the morning in one squad bay, jumping out of bed, standing at attention, get dressed, formation outside. And first thing in the morning, we go into the chow hall. Now, the chow hall is not a direct path. So we get in there. We know what the goal is to attain. As we're marching down the road, we're going to come to a stop sign, and we're going to need to do a column left. And we go to the chow hall. We're going to come to a stop sign again. And we might need to do a column right. And then we might need to cross a field, and we might need to pivot, left pivot. But we get into the chow hall. And if you're a military guy, you understand this. But if you're not a military person, then you can understand, you can visualize us trying to get to food, right? Which could be your nest egg later for when you retire, right? You're looking to build your nest egg to continuously provide food on your family's table. But some cases you have to pivot. You got to do different right turns. It's important for you to know when to pivot. And to Ray's point, when you separate from the military, any branch of service, and you have your thrift savings plan, it's important for you to know that you have some options. You get to now take full control of your nest egg, and you get to leverage that so you can one, preserve it, but also grow it at your own leisure. So you partner with people like Ray, who I know has a fund. He's a fund manager, and he's a capital allocator where they identify different assets and they help you to place those 401k or your self-directed IRA into different assets that can help you to grow it for later. What do you think about that, Ray?
That's perfect. And it really segues right into our next point, right? And I touched on it a little bit in the sense that if you're a passive investor, sometimes you need to talk to operators and fund managers to help you figure out how to put your money to work. So let's talk about that. And while this slide is going to talk specifically to how do we apply this as operators and fund managers, this mentality, this abundance mentality, really a passive investor can reverse engineer this and figure out how they can use those operators and those fund managers to help them.
Yeah, no doubt. So early in my investment journey, I was learning a lot. So if you listen to this entire thing, you understand that when you're starting out, you don't know what you don't know. But when you embrace the abundance mindset and you collaborate with the right people, you get a peek behind the curtain of what is possible. And once you see what's possible, if you go back to your old paradigm way of thinking or your old way of being, then you're missing a lot of opportunities. So we used to talk about not structuring a fund model, but what I'm starting to understand, what I've learned to understand and appreciate is that the more capital you can raise, the more leverage you have in a real estate deal. So I was talking to Hunter Thompson recently at a conference out in Phoenix, Arizona, and the topic came up. He said that the golden rule is the person with the gold make the rules, right? So if you have a fund where you can raise $1 million to $5 million or $10 million, then you get to advocate or negotiate for better economics for your investors. And this have a couple win situation. You win situation for the operators that the fund manager or syndicate is choosing to work with. They now have confidence in the ability to take down larger deal, economy of scale. Also for the syndicator or the fund manager, it gives them better economy of better negotiation economics for the deals, right? So if they bring in most of the capital stack, they can advocate for better returns. And this better returns can also transition into better returns for the passive investor, or ensuring that the passive investor's return is not diluted at all by the returns that was negotiated by the fund manager or the syndicator with the operators. So having the ability to walk away from unfavorable terms without fear of missing out. Because when you are able to raise capital, whether you are a syndicator or if you're a passive investor, and you have the capital, right, you also control, right, you control the gold. You get to make some of the rules as well. But think about this. If you invest in $50,000 into a $40 million raise, your $50,000 is absolutely important. But when you look at somebody who's writing a check for $5 million, right? It's important to understand how those negotiations are had, right? The fund manager going into a deal as an LP is going to be able to negotiate some different economics. Now, it's important for you that you understand the terms that other investors are negotiating within the deal as well, to identify if those are favorable terms for you and you think it's fair. So talk to your operators about who's invested in the deal and what other terms that they're getting as well. Time for a thorough assessment and due diligence to enhance negotiation and leverage. This due diligence on the operator, the market, the property, and also all the way down to the business strategy. And it's almost in that order. For me, H Square Capital, for us, H Square Capital, we are first identifying the best in class operators that we want to work with. And then once they find a deal that they have chosen, right, we look at the market, that the economics in the market that they have chosen, and then we go down to the deal. And then we look at the deal. Of course, we're going to look at the business plan and see if this is something we want to bring to our passive investing. The same is true about a fund manager. It's usually in that order, and maybe some other checks and balances that comes in with those due diligence that we are required to ensure that we are the best stewards of your capital. And that is enhancing the power of negotiation. Now, you also get to increase deal flow. Now, look, I'm getting ready to go out to the best ever conference in less than 6 days. And the reason for doing that is to be able to go out there and partner with people who are passive investor, but also active investor. And Ray, I think we met at the best of the Dealmaker Live in 2019.
I think so. Yeah, it's been a few years, man. But yeah, sounds about right.
And then we went to some virtual conference, so on and so forth. And we was able to meet online. 2020 happened. He was able to come on our podcast. We attend your meetup and in different ways. So the reason why syndicators and fund managers are doing this is to ensure that we are shaking hands and kissing babies, right? And we are being the best representation of ourselves, our company, right, and our family's name. And the same is true about the other people that we are networking at these events with, whether it's virtual or in person. We are identifying some of the best in class operators to ensure that when we place the capital from our passive investors, it's been placed with the best in class operators to ensure that we have capital preservation and also the best chance of your investment growing more predictable. So they give us the opportunity to increase deal flow, right? Attracting more opportunities through proactive networking and exploration, also openness and diverse property type and location strategy. So when you think about a fund like Ray is a fund manager, when I think about a fund and you are a high net worth individual, if the fund is diverse enough and you have $500,000 to invest, instead of putting $100,000 in just a single family property, if there's a fund that has oil and gas, multifamily, something in retail, maybe something in hospitality, you get to now put $500,000 into now more diverse fund in different markets, and you get to create more diversity in real estate itself, just like you have created diversity in the stock market by investing in different sectors within the stock market. Also, You have a higher visibility in the market. By a lot of us, what we do, we are pulling a lot of third-party reports. We also paying for a lot of third-party reports that ensuring that we are providing you with real-time information and the best projection, the best researched projection for the market and down to the properties that you're going to be investing in. Ray, what you think about that? Increasing deal flow and enhancing negotiation power.
Yeah, no, it really is. No matter which side of the coin you're on, whether you're a syndicator or an operator or whether you're a fund manager, your ability to use these concepts are going to be critical. If you close on one deal, and this happens all the time, and I mentioned it a little bit earlier, we close on a deal, Hutch, and let's just say pick one of our best markets, right? Which is down in. Give me one of your best ones right now.
Tallahassee, maybe.
Let's just say Tallahassee, right? So we pick a deal in Tallahassee, right? The minute we make that first property and we are able to buy that first property, what happens? A broker's reaching out and they're going, hey, I saw you just bought this property. Here's another one we want to show you. Why? Because we were successful in taking that property down. And all the steps that have to happen from the point that we identify it, to do due diligence, to find the capital, to close on the deal, those are not easy. It takes a team, and we've talked about that. But that then allows you to get into the next deal, and it provides you the confidence that you need to really increase your deal flow. So let's talk about that from the fund manager perspective, right? I'm an operator. I'm looking for capital. And I know, Ray, I know you've got stressless capital with some partners. Ray, I know you've raised money before. You normally come in on, you raise anywhere from 1 million to 2 million to 3 million on these deals. I need money, Ray, to close on this great opportunity that I have. And it's a great opportunity because I've done my work on the operator side, but now I need capital. But I'm going to go to you, Ray, before I go talk to someone else, because you've proven yourself to be able to raise the capital that we need on these deals. And you're not bluffing. And you don't say, I can give $3 million when all you can give me is $2 million. Or you don't say, I can raise $500,000 and then come in and say, I can't raise any capital, sorry. Because I'm an operator, I'm on a window. So I'm going to Ray, I'm going to you because you have done this before and you've proven it. That's how then I'm able to, as a fund manager, then negotiate for better terms. You need capital, you found a great deal. That deal's got enough meat on it so that you can give me, the fund manager, and my investors a better opportunity, higher preferred equity on that deal. Maybe the splits on the regular syndication is 70-30. I'm going to give you, Ray, and your fund an 80-20 split. So you get to keep a little bit more of the deal because I don't have to work so hard for the capital. You've done that for me. You're bringing that capital to bear. So it's just opportunities right there just to think about that from both the operator side and the fund manager side, how just having that abundance mindset can create those kind of great opportunities for us.
Yeah, those are great points, man. So demonstrating, do what you say you're going to do. And this brings us to the next point, which is how an abundance mentality helps in building trust. And to your point, Ray, pretty much do what you say you're going to do, whether you're a passive investor or active investor. If you say you're going to acquire this property, do the work, because it's going to take some work, whether you're acquiring 10 units or 300 units or 600 plus units like we did in Houston last year. So it's going to take some work. So for us, 8th Square Capital, we start on trust. And I mentioned that earlier that the first thing we're looking at is the operator. Do I first get to know this individual? And do I even like this dude? Do I even like this gal? So we start on trust. So know, and then trust. So before we put in any capital with folks, it's going to be on trust. So it's important that folks demonstrate a willingness to work together, fostering trust and strengthening relationship. Remember, relationship is supposed to be taking you different places. So also encouraging open collaboration and information sharing for a long-term goal-based decision. Look, today I was here putting some documentations together for our investor update for last month. And my phone rang and I picked it up. And this person called me. And we talked for a good 15 minutes about the best ever conference that we attended next week, and also some other strategy about real estate. And one of the things that we were talking about is that this individual just went to two different conferences, and want to go to another conference. And my question to this person was, have you taken the time to implement the things that you have learned from the last two conferences? See, it's important that we learn, but also implement. But the way we ended that conversation, I was telling the person, thank you for being a weirdo. And that kind of threw the person for the loop, right? Thank you for being a weirdo, because it's not typical that you just pick up the phone and call somebody, right? I'm that weirdo. If we build a relationship, I want whenever I call you, you answer the phone. Or whenever I send you a text, you have a timely reply. When I send you an email, there's a timely reply, because I have people, we all have bosses, right? What are you, a passive investor, and you're responsible to your family to ensure that the cash flow still comes in, or you are the syndicator and you're responsible to provide good timely information to your investors. So we all answering to somebody, and it's important that we have time to respond. So if I can't pick up the phone and call you, it's going to be a problem for myself and also down to our investors. So encourage open collaboration and information sharing for long-term goal-based decision. And of course, prioritize partnership for mutual benefits in the deal. And empower investors to seek win situation. We talk about owning an entire grape versus slices of watermelon. What do you think about that so far, Ray?
It's absolutely true. It's absolutely true. And I tell you what, and I like the way that, you mentioned this before, that before you even look at a deal or look at a location, you're looking at those operators. Are they experienced? Are they trustworthy? And really the best way to do that is, if you're a passive investor and you're looking to invest in a deal and you want to find out about a certain operator, they should be able to provide you references about deals that they're doing. They should be able to provide information about the type of reports that they're providing to investors in existing deals. And if you can't reach out and touch someone who's on one of their deals and get a feel for them, start running, because there should not be any questions whatsoever about that information flow. And trust but verify. Trust but verify. I was at a conference, I guess it's not the other day. It was late last year at this point, and we were at this conference, and I was talking to an investor about part of going to this conference is, like you mentioned, is networking. So I was talking to this investor out in the hall, and they had these exhibits, and a lot of these conferences, people go and vendors are there, and they're talking about either their funds or their capital, or maybe they provide a service, whether they do inspections or whether they provide some sort of loans. Those vendors are out there. I was talking to this one investor, and the investor is like, hey, you see that? And I don't remember exactly how we got into the conversation, but it's like that billboard there. And the actual vendor of the billboard, because they had like this about a 6 foot by 9 foot billboard that you put in front of your little area where you're giving information or selling something. And he said, see that? I've invested with that guy in that group. And that one deal right there where they talk about, it says that they got 17% returns. Ray, we only got a 7% return on that deal. We only got a 7% return. And I'm going, holy smokes, how does that happen? How do you say you put on a billboard that you gave 17% and you only did 7%? So trust but verify. And by the way, and then that's the other point, right? If you've got referrals, that person will never want to refer one of those investors from that deal to a prospective new investor. Because the minute I get on the phone, I talk to anybody on the list, they're going to tell me exactly what that investor told me. It wasn't 17%, it was like 7%. They got an extra one in there. So just critical. You just have to be clear. Now, if you happen to be that operator and you did not provide a 17% return, but you provided a 7% return, I think they'd be better served providing accurate information. 7% return is maybe not something to sneeze at for somebody who's losing money, who's got money sitting in the bank, and they're losing money to inflation. But it all depends on how you present it, right? Certainly the answer is not straight lying. So I hope that it was a typo, but my mind tells me that it probably wasn't a typo. So trust but verify, and operators, think about that. And before you put some foolish information out someplace, there are people that are going to be able to prove you wrong if you're just straight not telling the truth.
Yep, everything is verifiable in these days.
If people have only listened to portions of it, because it can't be long, we're going to try to break this down really quickly in a small summary, and then Hutch, I'll let you have the final word on this. once we get into this slide, and we'll show how people can get a hold of you and go from there. Bottom line, adopting an abundance mentality in real estate investing can greatly benefit you, investors, by increasing the deal flow and enhancing your negotiating power. This approach involves continuous learning, which fosters growth and trustworthy partnerships. That's, in a nutshell, what we're trying to do here. Easy to say, much, much harder to do. So hopefully you'll get a chance to really review this. We're going to put this out in a recording. This may be the first time you see it in a recording, but practice these things. Grow your network, grow your knowledge. Hutch, what do you think about that?
Now, it's important. It's really important for us to know how we're showing up. And in a lot of cases, folks are focused externally in those situations, how we're showing up to our work, to our boss and other people. But when you look in the mirror, are you showing up every day as the best version of yourself, for yourself, and then, of course, for the ones that you care the most about that surrounds you, right? Also the ones that you've taken on the responsibility through marriage or through birth, right? So it's important that you understand how you're showing up and consistently challenge your thinking, right? And ensure that you're thinking about your thoughts, thinking about your thinking, right? So continuously focus on your growth and ensure that your growth is consistent with the abundance mindset.
Folks, if you want to reach out to Hutch, the Marine Investor, here's where you can get a hold of him. Just picture this, or just look him up. Just type his name on LinkedIn, and you'll be able to connect with Hutch. Ton of knowledge, ton of practical experience that he can really apply to just about any problem that you have. It was fascinating where you're talking about when you have a problem, there's two people that you go to and you talk to, right? Those who just want to listen to you. And if that's all you want to feel good about yourself, go talk to them. They're just going to nod their head and listen to you. Or you can go and talk to somebody like Hutch that can give you more information and get you beyond that obstacle, that challenge, and keep you moving forward. So that's fantastic. And also on this slide, you'll see my link. If you want to get a hold of me, just go ahead and take a snapshot there, and we can do a 20-minute call and talk about these things, figure out how we can help you better invest your money. Hutch.
That's right. Really appreciate you for having me on this webinar. And it was a true honor just being positive for the past hour. So there's something that it does to your state, right? By being positive and digging deep and finding useful information to share with people who are taking the time to listen to this information. So if you listen to this, I want to thank you and I trust that you find some value in the things that we talk about today.